In today's market, is the fastest path to growing your wealth through buying and holding, or building and creating it yourself? I'm Tim Graham, and the Property Playbook starts now. In this episode, I'm joined by Michael Pell, Managing Director of Pell Property, a business specialising in helping investors maximise their returns through small-scale developments like duplexes and triplexes. Michael, thanks for joining me.
Tim, great to be here. Thanks for having us.
That's all right. Why don't we start by you tell us a bit about Pell Property?
Look, I started the business around 10 years ago now, and I'd always noticed growing up in a family from property people. My dad was in real estate. That traditionally it's just the vendors getting representation. It's always a vendor's agent selling the property on behalf of a vendor. So I thought to myself, look, there's a lot of buyers out there that need help, that need support. I love the investment side as well. So we moved to Sydney from Perth, started the business, and we assisted investors in Sydney initially to be able to buy properties wherever it made sense across Australia. And now the business has grown significantly since then. We've got a wonderful team of 15 staff on the Gold Coast, internal research team, and we've got Pell Buyers Agency on one side for established properties, and then Pell Projects. So you talk about the duplexes, the triplexes, the development side of the business. Because I think traditionally a lot of people want to aspire to be able to do developments, but they don't quite know how to do them. So
it's a big leap, isn't it?
It is a big leap.
A typical investor to becoming a small-scale developer.
A lot of risk involved as well. So for us as a business, our job's to mitigate, to minimise the risk. Have our due diligence done, properly for the clients to make sure that they know what they're doing and they can make a good decision moving into a project.
Yeah, you raise a really good point at the start there that in most real estate transactions, it's the vendor that's always been supported by a professional, but it's equally as important that the buyer is. It's a very expensive exercise if you get it wrong.
That's right. I mean, as we know, traditionally a buyer, you wake up on the old days of the newspaper and flick it on a Saturday or Sunday morning. Now it's realestate.com or Domain. You go out and you buy a property, but they're often doing it unassisted. They're relying on representations from a vendor's agent. Are they right? Are they not? There's a lot of inherent risk involved there. So for us as a business, we saw a little niche here to create a business to represent the buyer, to make sure that they can get it right, make sure that they can feel comfortable throughout the process, but importantly, engage in a profitable deal. And so honing in on just investors, it's been a great move. We're not involved in any emotional decisions. I don't like the colour of the bench tops, or I don't like the way that the house is laid out. For us, it's purely about the deal, the returns, the uplift. Is it an established property, or are we manufacturing our own equity through building a development site out, or whatever it may be?
Okay, very good. So tell us, how do you sort of triage a client or work out which direction to go in? Is it them that's driving that, or are you sort of advising them on whether they should be looking at something established or doing a small development?
It's a great question. So often clients will come to us not necessarily knowing which is the right way. So we'll plug in with their finance broker, or we can recommend them to the right broker. And we firstly start with financing and structuring entities. What can we spend? What are we looking at doing? What's our risk appetite? Are we looking more at the lower end, or have we got some room to move up and play in that duplex, triplex space? So the client's always in control. We will advise what we think is doable. In
Would it be fair to say some want to get the runs on the bird first, maybe a couple of investment properties before they move into?
It is always nice to get some confidence up and running. Start small. Property's a long-term game. It's not an overnight quick fix. It's not a get-rich-quick scheme. This is about good, sound, safe, solid investing. But you're right. Some people want to start small. Some have got portfolios already that have come to us and said, now I want to go to this.
Take it to the next step.
I want to go to this next stage of a mini developer. So we find it a really exciting space to sit in, because many of our competitors either sit in one, probably the buyer's agency, but not many go down the development side. And I've done a number of duplexes. My wife and I, we're doing a big development now in Surfers Paradise as well. So because we've done a lot of it ourselves, it's then just, I suppose, practicing what you preach, right? You know exactly what we do for our own stuff at Pell, whether that be myself or my wife or our team. We impart that and we give that knowledge to our clients, because their success is our success. By nature, we know a client doing well with us is going to come back and buy more, and we get paid a fair exchange in doing so. So it's a relatively small insurance policy, Tim, to come to someone like us to get it right.
Absolutely. Because you've never done it before.
Well, the pitfalls can be pretty great, and the losses of financial losses, time, opportunity cost, stress, a lot of it's the mental health, just to
sure.
know that you're doing the right thing. You don't want to be, sleepless nights worried about an investment, do you?
I mean, I've done a number of house and land packages myself, and that can be a stressful exercise. Trying to do a development, can't even imagine.
That's right. So, yeah, look, our in-house research team, headed up by some very, very intelligent people, bring the book smarts. I suppose myself, the old boy that's been doing it now since 1999, I bring a bit of the street smarts along with our wonderful acquisitions team, and I think together our clients love that. Book smarts plus street smarts plus negotiation, and getting it at the right price in the right area, and then it generally means the development's going to go smoothly.
Okay.
But look, our relationships with not only sellers and vendors and agents, but also the right builders in certain areas also means that our clients are winning along the journey, which means more profit in for them, and ultimately they can rinse and repeat. Because for investors, as you know, one development site or one investment property is not enough.
Yeah, that's
we need to build up a profitable portfolio, and that's what we aim to do.
Very good. So we've talked about duplexes and triplexes.
Yeah.
What's the interest in duplex and triplex? Is it usually them developing and selling, or are they holding? And obviously being in a high interest rate environment, I'm assuming these duplexes and triplexes are giving us a better cash flow?
Yeah, they can be. So often we can find a single dwelling site, 700-800 square metres, and then we can go to the council, do our due diligence and work out that we can chop it into 2 or 3. As we know, density is becoming greater and greater, because of like the size of the population growing in so many areas. So lot sizes are getting smaller. So we maximise that and make the most of that where we can, and say, okay, we can split this 900 square metre block into 3 300s. What does the build price look like? What does the timing of it all look like? What are we going to get from the end result? How much rent are we going to get? Weigh up the due diligence, the cash flows, everything that we need for our client. Because look, not everyone wants to live in an apartment, but they'll choose a smaller size block potentially, in a well located area.
Of course.
Yeah.
Now, I know you mentioned that you're from the Gold Coast, but am I right in saying you guys have a national approach in terms of if I wanted to do something here in Victoria, we could?
Yeah, that's right. So we look at all the major markets around Australia, the capital cities and the major regional centres. We steer clear of mining towns for obvious reasons. And so, our research team, acquisitions team, looks at these major markets to find opportunities. It's case by case, it's deal by deal. You can get a great deal in Perth, you can get a great deal in Adelaide, Sydney, Brisbane, Melbourne, wherever that might be.
Each market would have its own little intricacies as well.
That's right. So, our contacts throughout the industry means that we're often getting our sites, our properties, before they even go to realestate.com or domain. Because once they've gone through that process to get to realestate.com or domain, often we call that full retail. They've been passed through 5, 10, 15 sets of hands and eyes and ears to get there. So most of the stuff that we do, Tim, is off market, which is a huge advantage for our buyers. They love it because they're getting something they couldn't ordinarily get themselves, and that isn't available to the general public.
Yeah, interesting. So, Michael, one of the things I'd be interested in is, you find a site that's available for sale. What's the time frame for you guys to do due diligence to see whether that project's going to work?
It's probably around about 4 to 8 weeks.
Yeah, wow.
Yeah, especially if it's a development site. A single dwelling can be sort of 2 to 3 weeks, but we take our time, we get it right, and we would never say to a client to proceed on a site until we've absolutely ticked off
all your due diligence,
all of the research, everything that we need to do. Under promise, over deliver. Underdo the rent, overdo the interest rate. Put more in for expenses, so it becomes a better story later. Prepare for the worst case scenario, and it generally gets better. So I think the great thing with property, even in our time, we're similar vintage, we're somewhere in our 40s, I think, Tim. You look back at purchases a year, 2, 5 years ago, everything's cheap in hindsight. But often you look at it at the time and you go, maybe sometimes it can seem expensive, but after a year or 2 or 3 passes by, it's like, wow, how much did we pay for that? It seems so cheap.
Yeah, that's true.
And everyone always says, oh, can it keep going up? Can it keep going up? Well, yes, it's going up, but it's also the dollar devaluing over time, which is really important for people to understand. That with inflation, the dollar is getting weaker and weaker with time. $100,000 today is a lot less than what $100,000 was 10 years ago, or $1 million today, same. So people need to understand that holding the property for the long term is where they get the huge benefit. And you talk about, do they sell it? Do they hold it? Most of our investors would hold the property for the long term, refinance against the newly created equity that we've helped them create, take that back up to 80, 90%, pull that equity out, tax-free, there's your deposit to go again. Obviously selling, capital gains tax implications, costs of sale, marketing, agents fees, all that. Generally, we wouldn't recommend that. But again, it is case by case, depending on the client's individual situation.
Yeah, makes sense.
How old are they? Assets, liabilities, where are they at in their journey? How many properties do they have? So we look at that as a case by case. We don't have any properties to sell. We love the hunt. We love getting out and sourcing these properties. And yeah, we've found a bit of a niche and we really enjoy it, Tim.
Good stuff. So in terms of budget, you know, what sort of entry level price could you do a duplex, triplex around the country right now?
Duplexes, look, capital city duplexes, you're probably looking, 1 million plus. There are some regional areas where you can do sort of 800, 900K. Again, it's deal by deal, case by case. We've done a lot in southeast Queensland recently. When I say a lot, probably 5 or 6 over the last 12 months. So that's not that many. So they are harder to find, but we're finding more and more with people now wanting to potentially sell the family home that's on a bigger block, or for whatever reason they're splitting up. So 1 to 2 million in the capital cities, and 800, 900 regional.
Still quite good.
Well, you think about it, you're splitting them into two, and then obviously you're creating that equity there. Yeah. With the 2 titles having been created.
And how many of your investors would be, buying something, split it into 2, and then sell one off?
Many would. It again depends on the situation, and they don't have to make that decision when they're buying initially. We just show them the deal, show them the profits, what the margin will be. They can make that decision in that 12 to 18 month time frame. So it gives them that options and flexibility for sure moving forward.
Very good.
Yeah.
Michael, it's been a really enjoyable conversation. If people wanted to reach out and learn more about what you can do, what's the best way to reach you?
On the socials at Propel Property or propelproperty.com.au, Tim.
Terrific. Thank you so much for joining us.
Thanks for having me.
Well, folks, that's the play for today. This program has been brought to you by hotspotting.com.au. This is Ticker. We'll be right back.